Welcome to the discussion video on Module 14, the gross profit method. So, for Module 14 and Module 15, we'll be analyzing yung methods on estimating inventory. So, there are cases na kailangan mong i-estimate yung amounts of inventory because at the time na hinihingi sa'yo ay hindi mo pa ma-identify yung talagang actual figure ng yung inventory accounts. So, one is to use the gross profit method. So, an inventory valuation allows so ano bang ibig sabihin ng gross profit? The gross profit is your gross sales minus your cost of sales is your gross profit. So, itong gross profit method will be revolving at looking at the sales minus the cost of sales. So how do we value? An inventory valuation allows a company to provide a monetary value for items that make up their inventory. Inventories are usually the largest current asset of a business, and proper measurement of them is necessary to assure accurate financial statements. If inventory is not properly measured, expenses and revenues cannot be properly matched, and a company would make poor business decisions. This is very true. A company will choose an inventory accounting system, either perpetual or periodic. In perpetual inventory, the accounting must show the amount of inventory on hand at all times. Periodic inventory is not updated on a regular basis kasi antong periodic inventory, kailangan niya pa ng inventory count or yung mga physical counting at the end of the year at a particular period para ma-identify yung inventory at hand. So we define the gross profit method. So under the gross profit method, we estimate the amount of ending inventory. The gross profit method used to estimate each month's ending inventory, or it might be used as part of the calculation to determine the approximate amount of inventory that has been lost due to theft, fire, or other reasons. So the gross profit method is used to identify yung mga ending inventory ng company. Especially, this has been very useful and this has been very popular in the CPA board exam because the estimation of the inventory that has been lost due to theft, due to fire, and other calamities has always been part of the CPA board exam. Magkano ang inventory? Bibigyan ka ng mga beginning inventory purchases before the fire destroyed the entire warehouse, mga ganong klaseng problems. So the gross profit method assumes that the company's gross profit rate in the current period is similar to that of the previous period. So this is the dapat mong tandaan because this is the logic under the gross profit method. Ginagamit natin yung ratio ng gross profit rate o yung ratio ng gross profit to your sales in the prior periods to estimate yung cost of inventory in the present period. So, let us take a look at the steps given to you. So, tingnan mo. Calculate the historical gross profit rate. Sabi niya, the gross profit from prior periods divided by the net sales from the prior period. So, ano makukuha mo dyan? The gross profit rate. You calculate the cost of goods available in the current period. So, paano mo mako-calculate? The beginning inventory plus the net purchases is your cost of goods available for sale. Then, you estimate the gross profit for the current period. Anong gagamitin mo? The historical gross profit rate multiplied by the sales revenue of the current period. Kasi nga, ina-assume natin that the gross profit rate of the prior period is essentially the same as of the present period. Number 4, you estimate the cost of goods sold. So, kanina, nakuha mo na under step number 3. Anong makukuha mo dito? The estimated gross profit. So, pag nakuha mo na estimated gross profit, then you deduct it to your net sales revenue. So, net sales revenue minus your gross profit, anong makukuha mo dyan? The cost of goods sold. Because sales minus cost of goods sold is your gross profit. So, pag nakuha mo na yung cost of goods sold mo, dahil available ang data related to goods available for sale minus the estimated cost of goods sold, you will get your ending inventory. So, nilalaro lang natin yung lahat ng concepts na natutunan mo on your cost accounting and the accounting for manufacturing operations when we are looking at the gross profit method. For us to be able to appreciate more, let us look at the example. Net sales for the period 130, beginning inventory at cost 10,000. The net purchases for the period is 90. The estimated historical gross profit rate on net sales is 40%. So binigay na sa'yo itong historical gross profit rate. So how do we solve this? Look at the provided solution. The estimated gross profit rate is 40%. The beginning inventory at cost is 10,000. So computein muna natin yung cost of goods available for sale. How do you compute for the cost of goods available for sale? The beginning inventory plus the purchases. So, ang beginning mo is 10 plus 90 is 100,000 ang yung cost of goods available for sale. Dahil ang cost of goods available for sale ay 100,000, hindi pa tayo makaka-move agad dito sa cost of goods sold. So, let us use yung estimated gross profit rate to be able to identify yung estimated gross profit ng current period. So, ang net sales mo daw for this period is 130. Ang gross profit rate mo daw on the prior period is 0.40. So, i-estimate mo kung magkano ang gross profit mo sa period na ito. Kasi 'di ba, ina-assume natin that the gross profit rate on the prior period at yung current period is essentially the same. So 130,000 times 40% is 52,000 ang estimated gross profit rate. So ibawas mo lang 'yon sa yung sales na 130, you will get your cost of goods sold at 78,000. So kung ang cost of goods sold mo ay 78,000, ilagay mo lang dito and compare sa yung cost of goods available for sale. Therefore, ang yung estimated cost of ending inventory is 22,000. Okay. So, ganun lang ang pag-identify under the gross profit method. So, I think that ends the discussion on the gross profit method. On the next video, doon naman tayo sa retail inventory method. Thank you.